Hi, everybody. So we've spent most of the last 2.5 days talking about AI, how it will change our lives, the geopolitics of AI, the race for better chips. But AI in so many ways is also about the scramble for energy and the power to light up all of those vast data centers that are going to be built or are being built. A country's ability to harness one of the most powerful technologies ever will depend on their access to power. So what does that mean for the emerging powers in the world that for so long have seemed to be on the cusp of joining the top table of power brokers, talking about Singapore, India, and Indonesia, countries like that, but also countries like, regions like Africa and South America, and we'll get into all of that. But before we do, Patrick, I'd like to sort of ask you maybe to sort of set the table for us. You've been building energy companies for about 20 years now, and before we came on stage, you were talking about how the demand structure for energy is just like transforming before our eyes. As an industry, something of an industry veteran, can you tell us a little bit about like just how fast this transformation is happening?
Yeah, absolutely. Thanks, John. I mean, I think what I would say is that, just to put some historical context here, and maybe just using, slightly a US-centric view, but this is really a global theme, which was for the last 20 years, we were in a relatively low demand, low volatility energy environment. In the US, specifically, in 2001, the US was a net energy importer, meaning we imported more energy than we exported. And effectively what happened is we figured out how to frack natural gas, and fracking natural gas created effectively a high energy society and a relative period of abundance for the last 20 years. But what then structurally changed, of course, is AI and compute and the voracious energy needs behind that, then compounded by the fact that after 30 years of globalization, we've now decided to go the other direction and focus more on domestic resilience and national security and reindustrializing the domestic core, all of which, of course, requires an incredible amount of power. And so now we find ourselves in a world with inflecting demand for energy, but supply is inherently a laggard, right? We're talking about concrete and rebar and steel. And so you have one nonlinear set of compounding growth curves on the demand side, yet supply is ultimately lagging. And that is really the story we find ourselves in today, which is we're talking a lot about AI, but what we're really talking about is the real story behind it, which is it's actually the energy that's the rev limiter to the transition to an AI and robotics-driven economy.
I mean, I think the stat that we had in the intro to this panel talks about how by 2030, if you look at the extra energy that we need, it's like adding a country the size of Japan to the global energy grid. Does that seem conservative? I mean, could it be more than that, or does that sound about right?
Yeah. We want a 3x energy production in the next 10 years, just in the US alone, which is a physical impossibility.
Yeah.
We're literally talking about building physical infrastructure to 3x the current amount of capacity of power that we have in that, in the US alone, which just can't happen, which means that we're just incredibly short as a society. And the only way we're going to be able to solve that is through, of course, a lot of building, but clearly a lot of efficiency gains, and by software enabling and adding robotics throughout the economy to be able to fill that gap.
Well, and I want to get you in later talking about nuclear, but Josephine, let me turn to you. You used to run Uganda's state-run oil company, so you also know a thing or two about energy, and especially energy in the emerging world. Is there a risk here? So when we talk about AI, we talk about the US, we talk about China, India and Europe, sort of on the size. But if this is about the power of the 21st century, AI is one of the big sort of superpowers of the 21st century, how is Africa going to power all of these data centers, given the energy resources that it has right now?
Well, I mean, it's a really important discussion to have because, we know that Africa, particularly sub-Saharan Africa, has energy challenges already, right? And, we can trace that back to some of our sort of colonial past and tying into a conversation yesterday about these industrial ages, right? If you look at the previous industrial revolutions, typically most of sub-Saharan Africa has missed that. And look, it's been a combination of complex issues ranging from colonial extraction as opposed to industrialization. So a lot of the countries, when they got independence, were energy and infrastructure poor. And so now we have this legacy that was compounded by political instability and some governance challenges, where if you're energy poor in the world of AI, you're AI poor, right? And so how do we ensure, and this is something I'm passionate about and many others, how do we ensure sub-Saharan Africa does not miss this industrial revolution? AI has its risks and challenges, but presents so much opportunity, and we want to be part of that. So instead of just being a consumer, where we offshore our data models, our data centers, our compute capacity, which leaves us vulnerable to economic risk, security risk, privacy, data issues, governance and sovereignty issues, it becomes even more imperative that if we don't want sub-Saharan Africa to be in a position again where we miss an industrial revolution, particularly for this one where there is such rapid innovation, we're at risk of not just missing it, but also being left completely locked out and on the margins of innovation and global value chains for up to a century, one study showed. So it is, addressing this from the critical factors of energy and data infrastructure become even more imperative for a continent where for a large part there is that lack of energy. And so what's needed is capital. All of this is driven by, we need innovative investment vehicles to drive that infrastructure build.
Well, realistically, given that Africa already has its energy deficit, how much of the future shortfall can be made up?
Look, it's going to be bold and ambitious.
Yeah.
I always say AI doesn't just consume energy, it devours it, right? And so we're looking at levels of energy demand we've already sort of never seen before for even the developed countries, as Patrick pointed out. And so, as someone who ran a national oil company, and I know this is not always the popular view, but if we look at equitable energy transition, we have to be realistic that there are parts of the world that are going to need traditional energy for longer. So your traditional energy sources, but Africa has enough sun to power the world. We can also do wind and geothermal and renewable energy. Unfortunately, the pace of which we're growing in renewable energies is still about 7%, whereas the world average is about 15%, so we need to increase pace. And the only way to do that is accelerate investment financial vehicles to get capital to address this.
And to what extent is this sort of the pullback on fossil fuel lending that we saw, especially from French, British, other European banks over the last 10 years? Contributing to this problem. Yeah.
I have real experience on a pipeline. We were sorting the finance. So the pipeline that we were doing from Uganda through Tanzania is going to be the longest trace-heated pipeline. Construction's underway, but when we were arranging the financing, a major European bank pulled out because their shareholders gave them pressure, right? Understandably. And so we had to find alternative financing from countries that are more favorable. And that's just the reality, We're in this tension. Although I think the mood is a bit different now. I think if I was raising the money today, there would probably be more interest because there's a geopolitical shift around renewables and financing traditional energy. So yeah, the reality is, shareholder pressure for some of the European banks means they can't finance energy projects in Africa.
So, Emily, so much of this is about financing. You work in distributed energy finance. Can you just tell us a little bit firstly about the work that Odyssey Energy Solutions do?
Yeah, Odyssey's mission is to accelerate financing of distributed energy in emerging markets, very much because these economies already have the challenge of demand being greater than grid supply and this infrastructure gap. And so they're leapfrogging the grid entirely and building out a new type of energy infrastructure, energy paradigm of small on-site solar and storage systems versus a big power plant and then spreading that energy throughout the country. And they can do that because so much of the new energy infrastructure that's being developed in these countries is solar and storage, and that cost has come down 99% for PV and 95% for batteries.
And I suppose yesterday we were talking a little bit about how this can actually be an opportunity. Building new grids. We're in a world now where you need to build new energy sort of infrastructure. It could actually give some poorer countries an opportunity to avoid the mistakes or leapfrog the sort of the situation that we have in the US, where you have a very sort of buckling poor grid that's already struggling, especially in places like Texas, right?
Yeah, so I get to be the optimist here. I mean, there's no denying that when, in these markets, given you already have an energy deficit, purely from growing energy demand from economic development and fast-growing populations, adding AI onto that is going to exacerbate the problem, right? And there's a real risk of these economies being left behind because they don't have the energy to power AI infrastructure. That said, there's sort of two dynamics that are happening in the energy sector in these markets that are promising and can potentially make them have specific advantages for bringing AI infrastructure in. So the first, what we talked about, is distributed energy. Distributed energy is very important for AI. A lot of these data centers are building, on-site, co-located energy systems. You can do that much faster, right? A lot of the distributed energy sectors in these markets are deregulated, and so you can actually move much quicker to get the energy systems up. They've got batteries integrated, so you can sort of smooth out the erratic demand that comes from various uses of AI. And you don't have to rely on building out sort of big grid infrastructure like transmission lines. So the sort of expansion of distributed energy is a major opportunity. The second is
if I can ask, which countries do you see as being sort of most conducive or to open to this distributed energy approach?
Yeah, I mean, India is a huge market for this. Africa, much of the energy infrastructure that's being built is distributed energy now, and distributed clean energy, solar storage. The second opportunity is just that a lot of new infrastructure is being developed. So many of the challenges that the US is having around meeting the AI energy demand is simply that we've had, as you said, flat demand for years, right? So now suddenly we're kind of racing to catch up with the prospect of lots of fast-growing energy demand. We haven't had to do that before. And so we heard in a previous panel things like permitting, right? That it's a long process, and it wasn't as big of a problem when you didn't need to get a data center up very quickly. We can avoid a lot of that when we're building new infrastructure in emerging markets, right? We can build really smart grids that are doing, DER optimization, demand response. Obviously, there's already a push to deregulate and be able to move very quickly with distributed energy resources. And so all of that kind of put together means that there is this picture of the emerging economies being a place that's attractive to AI infrastructure because they have the opportunity to build a landscape for energy infrastructure development that's suitable for AI.
Okay. I'm going to bring in Patrick now, but just very briefly, housekeeping, just a reminder, we have, if you have a question to submit, please scan the QR code that's just up on stage there. So Patrick, listening to, all of, the energy demands and the energy shortfalls, the challenges that we have around the world, one would be tempted to say, well, nuclear should be the answer to everything. And I'll get you talking about, the advantages and the opportunities for nuclear energy in a moment. But can you talk to us a little bit firstly about why nuclear can't solve every single one of these problems?
Yeah, I mean, I think again, just to me, everything is just put it in a historical context. And I think if we look at 5,000 plus years of recorded human history, I think what we'd find is we've always used everything we could generally get our hands on at any point in time, and to put that into productive use into the economy, to grow the societies across the world. And so I think it's always all of the above, and the answer is always, ultimately comes down to a question of cost. What does it cost to be able to deliver the next, kind of productive use, unit of energy? I think what's unique to us right now is, if you were to ask 5 years ago, would we be having a conversation on stage about the idea of building net new nuclear generation in the US or really anywhere globally? And the answer probably would have been, not really. And the reason would have been because demand wasn't there. Yeah. And now, of course, what we see is demand, of course, inflecting materially, supply being short. And now probably the biggest conversation I've heard most often this week has been a conversation about this next new nuclear renaissance. And so there's a lot of ways to go out and solve that. I mean, I think we certainly see, we had $15 billion go into advancing new reactor designs over the course of the last decade. But it would kind of forget the question in many cases of, well, tell me about the current reactors. And if we look back, at least in the US, we have 94 operational gigawatt scale nuclear reactors producing 20% of the power in the US grid with the highest capacity factor. Capacity, of course, being a proxy for reliability, meaning it's the most reliable source of power. Well, then the question would be, well, what's the issue? And I think what we came to believe at the nuclear company is it's not the reactor, although we should always be advancing reactors. Just empirically, you'd have to believe that the reactors are incredible, given that they're the most reliable source that we have. It's deployment. We haven't been able to deploy them on time, on budget. We've only deployed 2 in the US in the last 30 years, and they took a little bit longer and took a lot more capital to be able to get there, which is why we decided to co-found and build a company called the Nuclear Company, which is focused purely on solving the deployment problem, where we use proven reactor designs, but we changed the business model from an N of 1 business to a fleet scale model, where you design once and build many in a series, which is when you can really build scaled supply chains of labor and materials, and then software enable the entire end-to-end execution of these projects to remove the cost and time and friction, so we can get new nuclear generation delivered into the grid at a cost that actually can compete with natural gas or other forms of energy production. And so this is only because of this demand picture that we're seeing, where we're now short, and we're seeing every major hyperscaler or industrial partner realize that their stock price is actually just a derivative of their access to electrons. It's literally an electron to compute conversion. If you have 2x the access to electrons as your next best competitor, you're probably going to have 2x the amount of computing infrastructure as that competitor, and therefore likely, be priced and valued in a similar frame. And now it's, in our experience, a complete arms race to secure the electrons. This is both, of course, at a corporate level, but it's also at a government level. It's at a sovereign level, where there really is no sovereignty, there is no security without energy security. And so that's why we see folks, like Prime Minister Wong, of course, now bringing back this conversation about maybe we need to be looking at new nuclear capacity here in Singapore, and really governments globally having this exact same conversation. And so it's a unique moment. Go ahead.
Well, speaking of superpowers and geopolitics, just for context, could you just tell the audience, we were talking about this before we came on stage, just how many nuclear plants have come online in China over the last 20 years, and how many we expect to come online in the next 5 years versus what we're seeing in the US? So 100%. So the US today is the world's leading superpower in nuclear generation, or the production of energy from nuclear generating assets. But the U.S. has actually already lost that race. So, China today has over 30 reactors online, another 30 in construction, and over 400 in their development pipeline. The U.S. will ultimately cede the current title of the leading superpower in nuclear energy production in the mid-2030s. And so, I think the big picture there is just, I think China was smart enough to realize that the next 20 years of the global economy is going to be mostly defined by AI, compute, and robotics. And the input to all of those things is effectively electrons. And so if you want to be the world's leading economy, you have to have the world's leading supply of electricity and electrons. And nuclear is the one source that we've seen that can produce the density and capacity and scale of electrons that are required to fuel this transition. And so China, has been incredibly successful. We've also seen this in France, where when you standardize designs and ultimately repeated execution serially, you built 40 plus reactors in a very short period of time at a delivered cost that works. We see the same thing in South Korea, which has been incredibly successful. It's this kind of thinking, the standardization of the industry, the industrialization of the industry, the deployment serially and repeatedly, and then the software enablement of this industry that's ultimately going to get us back to a pace where we can ultimately meet the demand needs that we're seeing from industry. I have someone in the audience who's pushing back a little bit on you.
Please, go ahead.
Challenge you a little bit. So this is someone from the audience, attendee 496, whoever that is. This is all anonymous. There's proof of that. Is nuclear energy in a hype cycle vis-a-vis other proven forms of technology like solar? What is our assessment on nuclear technology readiness and grid readiness?
Yeah, I think, a couple questions there. I think the first thing I would say is, nuclear fission is not a new technology. We solved it 75 years ago when we split the atom, and have been able to prove just empirically that it's the most reliable source of power we have, at least in the U.S. today. Again, capacity is the proxy for reliability, and nuclear generating capacity has a capacity factor about over 90, about 95-ish+%, whereas if you look at then wind and solar, what you would generally find, and by the way, I'm an all of the above person, meaning we should do all of these things, but wind and solar generally are in the 20 to 30% capacity range. And so if you add storage to those things, you can get them to, higher, call it 40 or 50%, which is about where natural gas is. But generally speaking, that means that those forms of energy production are somewhere between 25% to 50% as reliable and as effective as a nuclear generating asset. Doesn't mean we shouldn't have all of it. And again, I've been building renewables companies for 20 years, and I'm a huge proponent of them. It's always all of the above. But in terms of being able to meet the demand applications that we're seeing from AI and the demand applications that we're seeing from some of the largest industrial partners in the world, they need 90+% capacity factor power. They need it at incredible scale, and they need it now. And so that's what is really driving this next renaissance in nuclear expansion. And the only question is going to be how long demand stays resilient, right? If it's 2 decades, if it's 3 decades, we'll be in a long period of new nuclear expansion. If it's shorter than that, ultimately, I think we'll see a shorter period of new growth. But I think most folks, at least certainly we believe, this is a multi-decade megatrend, given the compounding factors driving it.
Josephine, so we talked about the energy deficit in Africa. Obviously, there's a cost issue, but can nuclear be to what extent can nuclear be part of the answer for Africa?
I mean, absolutely, but again, you can't.
In the real world, theoretically, yes, but in the real world.
Theoretically, absolutely. The reality is cost, right? I mean, it's expensive in the developed economies if we even start that conversation. For emerging economies, it's like a whole nother layer of cost that we fundamentally are not financing enough what we need today. We need 10,000 MLE companies across Africa, right? We need traditional energy expansion. We need more gas. And all of that needs financing. So nuclear, I big proponent, but we just practically cannot raise that kind of level of financing.
Obviously, China has been investing in energy infrastructure in Africa now for decades.
Yeah.
And it's, China has had a lot of success in using that to sort of build soft power. Could you imagine China offering cheaper, cost-effective nuclear?
I think China might be better at answering that question. Look, it would. Personally, as someone with a background in energy, I would love to see the expansion of nuclear energy across Africa. The practical realities of the infrastructure and costing needed in that. There's still such fundamental energy demands and needs that we need right now, done at scale, at pace. And we need that finance today. To then be able to have this sort of almost luxury of saying, well, what other options can we look at and finance on a realistic level? But I think, it's great to hear that it is growing. Often, if there is that kind of pace and interest, there is more hope of it sort of expanding into certain economies that may not even be thinking about it. I know most sub-Saharan African countries have some form of nuclear division looking at these technologies. I think if we can sort of embrace and take the benefits of that increased global adoption, then there is hope.
I have 2 thoughts on financing energy in Africa. One is, if you look at the traditional type of financing for energy infrastructure is infrastructure finance. You put a bunch of money up front, and then you have predictable power generation and revenues over time. The barrier for infrastructure finance in Africa is just so much higher. So I'm skeptical of nuclear working because, not only do you have to get the dollars flowing into nuclear, then you also have to get them flowing into Africa, which is just a high bar. And there's a much smaller set of investors that are willing to put their money to work in Africa than other economies. The second is, I focus on distributed energy. What's unique about the shift away from big power plants to many small assets all over powering households and businesses is it's actually a different type of finance. You don't need infrastructure finance. You need consumer financing. You need the equivalent of mortgages and car loans, right? You need someone to be able to go to the bank, take out a 5-year loan to put solar up on their house or on their business. And that's an entirely different paradigm for financing energy infrastructure, right? It's a different type of dollar that's needed to build the energy transition in these markets.
But if I sort of tie it back to the conversation around AI and where we need to industrialize, often the off-grid, microgrid, it has a phenomenal impact at the consumer level, at the business level. But industrializing, back to Patrick's point, on the levels of energy that we need, that's where there's a challenge, right? That's why we need the balance, because otherwise, homes can be powered, businesses, but once again, we're at the back of the queue for the bigger energy needs that need to drive industrialization, which is critical.
Although you could flip it too, right? So you could say, I'm gonna put a data center here, I'm gonna build the energy system for it, and then I'm gonna power all of the surrounding areas. And so then that's a major challenge with energy infrastructure development in Africa, is that you don't have those base loads that AI could actually
Exactly. And so that's where the bigger financing, the more innovative financing structures, and some groups are starting to put the bigger pools of money together. Sometimes it takes too long to disperse, but that's what we need, because the levels of energy demand just aren't today often being met enough by solar and thermal and wind energy.
I mean, before we run out of time, I just want to get a very quick comment from you on India. You mentioned that you do a lot of work in India. Obviously, India is one of those countries that has, superpower aspirations, and you can't be a superpower in the 21st century without having some sort of very strong AI capability. How do you assess the resilience and strength of the Indian grid and India's sort of energy sources in terms of expanding its AI capacities?
So India has many of the same challenges I described generally for emerging markets, a weaker grid than the rising energy demand. But it is farther along in sort of the vision I put together of data centers, AI data boom going alongside a renewable energy boom. So you see Reliance building huge data centers with solar parks right next door. You see new regulation coming out of the Indian government for open access PPAs that allow these data centers to get renewables through the grid. And so I think India will certainly be a leader for emerging economies on how you develop AI infrastructure in tandem with the energy infrastructure you need.
Thank you. We are out of time.
All right.
Thank you all so much. That went really quickly. Thank you to the panel. Thank you to the audience.
Thank you.